Revenue down 1%, but basic EPS for the period up by 3.7%. So although you still seem to be having a little bit of pressure on the revenue line, you're still coming out okay here.
I think the earnings per share a little bit misleading. We're down 16% at the operating level. A few challenges in Australia really have brought the numbers down. We've had some benefit on the tax side in terms of we had a deferred tax asset that's come through. We had income from an after-tax income from another company that we have shares in. So the earnings per share being brought up by accounting issues rather than operational issues.
How are you managing things at the cost level then? Because that would indicate that costs are very much under pressure at this stage.
That's exactly what we're finding. The price of oil having an impact on our gas prices and commodity prices having an impact on our glaze costs. Glaze incorporate things like zirconia and other industrial minerals, which as industrial commodities, the prices have gone up quite dramatically. So we are taking cost pressure, and the strength of the rand obviously giving us no freedom to operate at the pricing level, because we have to compete with the imported products.
What are you doing to mitigate those cost pressures in that case?
We've got a number of projects on the go. We're looking at the clay bodies in terms of being able to strengthen them, make slightly thinner tiles, which will reduce energy costs, which also gives us some green benefit in terms of total usage of energy. And then also looking at ways to mitigate the glazes to be less dependent on the high price industrial minerals.
And of course, we had pretty big electricity tariff hikes last year, more of the same this year, so this green energy usage should help on that front.
It will indeed. We've seen a doubling up in the last 2 years of our total electricity bill. And obviously anything that saves energy will also have an impact on the electricity side.
Tell us about the Australian consumer, because you mentioned the Australian operations not performing as well as you'd like them to. Australia, one of the only Western countries that didn't go into a recession, but it looks like people still not spending there.
Well, I think if you look at the total indebtedness of the average individual in Australia, we saw a nice uptick in the market when they put in their tax incentives to mitigate against the global crisis. And what we had there was incentives for first-time homeowners. And because there was first-time homeowners, there was a renovation demand for our product. And that gave us a bit of a demand. Those incentives have dried up in Queensland and in New South Wales now, still in Victoria. But we saw a big decline in demand in Queensland with the cessation of the tax incentive.
In the South African operations, that sanitary ware revenue up nicely, so up 13%. It's a much smaller percentage of the total revenue, of course. Tile revenue down by 3.3%. That's across all your operations. Why are you seeing this disparity between sanitary ware and tile ware? Does that indicate something about the building cycle?
Not really. What it indicates really is that last year we had a very bad 6 months in the sanitary division where we went through a strike. So we saw a declining volumes in terms of production and sales because of this. We took a 2.5 month strike at Better Sanitary Ware. Obviously, we're coming off that base, so we're seeing an increase in revenue because of the decreased base.
Where are your tiles used mostly? Is it for the residential market? Is it new builds? Is it for the renovator market? Where do you see most of your demand in normal times?
Our normal demand is residential market, and at the moment we're seeing demand come out of the renovation market. Our read is about 70% of the tiles that are purchased at the moment are for renovation. Obviously, as the build cycle changes, we see more demand coming through on the new build. But we're not very positive on the new build until at least the end of this year and maybe into 2012.
You do say in the commentary that the second half of the year is expected to remain tough due to the global environment at this stage. When do you see any pickup in that?
I've always believed that towards the end of this calendar year, in other words, sort of the end of the third quarter of 2011, we'd see some change in demand. But we're not predicting any great shakes until mid-2012.
So in the meantime, revenue could remain under pressure. How about costs, though? Will some of those mitigating effects start to take place during the second half?
A number of the projects have already been implemented, and I believe already in the fourth quarter this year we'll see some benefits from those projects.